The United States and China have agreed to suspend most tariffs for 90 days, marking a significant de-escalation in the trade war between the world's two largest economies. The talks in Switzerland resulted in significant cuts to the tit-for-tat tariffs that have been stacked up since February on both sides. With the new agreement, both countries have agreed to suspend the majority of those tariffs for 90 days starting May 14th. Under this agreement, US tariffs on China will fall from 145% to 30%, while China will reduce its tariffs on US imports to 10% from 125%. Additionally, President Trump stated that since some of the tariffs were only suspended and not permanently removed, they could be reinstated in 3 months if no further progress is made. In this video, we examine whether the trade war between the United States and China has truly come to an end. To begin, let's examine how the tariff war started. The trade war between the US and China escalated once again in early 2025, when a series of tariffs were imposed on a wide range of imported goods from China. The goal of tariffs was to boost American manufacturing and reduce the trade deficit with China. However, what started as a single tariff quickly turned into an economic tit-for-tat. In retaliation, China imposed tariffs on American goods entering the Chinese market. Let's break it down step by step. On February 1st, just days after taking office, the Trump administration announced a new 10% tariff on all Chinese imports. This added to existing tariffs from previous years and reignited the long-simmering trade tensions between the world's two largest economies. On February 4th, China responded swiftly. Beijing imposed a 15% tariff on US coal and natural gas, along with a 10% tariff on crude oil, farm equipment, and large vehicles. On March 3rd, the US raised the tariff rate by another 10%, bringing the total new tariff to 20%. On March 4th, China hit back by imposing tariffs on US agriculture. China imposed a 15% tariff on American chicken, wheat, corn, and cotton, and 10% on soybeans, pork, and other key exports from US farms. On April 2nd, President Trump announced an additional 34% tariff on Chinese imports. This raised the cumulative tariff to 54% on Chinese imports. On April 4th, China responded by placing a 34% tariff on all US goods. The trade conflict between the US and China was now in full swing. On April 7th, the US responded with an even steeper increase, an additional 50% tariff, bringing the total to a huge 104%. President Trump signaled his willingness to negotiate with China, stating, "We are waiting for their call." On April 9th, while most US trading partners received a temporary 90-day tariff relief, China did not. Instead, the US raised Chinese tariffs even further to 145%. In response, China raised its tariffs on US imports to 84%. On April 11th, there was a small step back. The US removed most tariffs on consumer electronics from other countries but kept a 20% tariff on Chinese electronics. China retaliated once more, raising tariffs on US goods to a crushing 125%. On May 12th, both sides paused their tariff war. US tariffs on Chinese goods dropped from 145% to 30%, while China's retaliatory tariffs fall from 125% to 10%. But the deal only lasts 90 days. If progress stalls, the tariffs may return. Talks continue, with both sides expressing interest in long-term cooperation. What factors have led to the current pause in the trade war? The tariff war took a heavy toll, not just on China and the United States, but on the global economy as a whole. Signs of economic stress and fears of a recession began to appear rapidly in both countries. Goldman Sachs raised its estimate of a US recession from 20% to 35%. JP Morgan increased the likelihood of a global recession from 40% to 60% by year's end. It also warned that US GDP growth could fall from 2% to just 0.5%. S&P Global made a similar move, raising the probability of a US recession to between 30% and 35%. Financial firms like Barclays and UBS also issued warnings, stating that the risk of a US recession would rise sharply if the new tariffs remained in place. The International Monetary Fund also downgraded its global growth outlook, warning that the US could enter a recession in 2025. In fact, the American economy had already shrunk in the first quarter, just as President Trump marked his first 100 days in office. At the same time, consumers began feeling the impact of tariffs, which led to higher prices on everyday goods. The stock market faltered, partly due to growing concerns over the economic impact of new tariffs on China, which also caused analysts to lower their forecasts for the year. The value of the US dollar weakened, while investors turned to gold as a safe haven. Additionally, trade volumes between the US and China dropped, and US ports received fewer shipments from China. On the other side of the Pacific, Chinese factories began cutting production. Some were even forced to lay off workers as demand from American buyers slowed. All such factors compelled both countries to sign a 90-day tariff suspension deal. But the suspension of tariffs is temporary. If negotiations stall, the trade war could quickly return. Why the US engage in the tariff war with China? The United States and China are the two largest economies in the world, and also major trading partners. However, the US runs a much larger trade deficit with China than with any other country. According to the US Census Bureau, the United States recorded its largest trade deficit with China in 2024, totaling approximately $295 billion. That year, US exports to China were valued at around $144 billion, while imports from China reached roughly $439 billion. Mexico and Vietnam rank as the second and third largest sources of the US trade deficit in 2024. Altogether, the US trade deficit with its top 10 trading partners adds up to nearly $1 trillion. The US exports goods like soybeans, pharmaceuticals, and petroleum to China. In return, it imports large amounts of electronics, toys, and especially smartphones, many of which are manufactured in China. Despite the tariff war, the trade gap between the US and China remains wide. The United States continues to run a large trade deficit with China, prompting Trump to push for a more balanced trade agreement. What have been the reactions to this agreement, and what are its impacts? In Washington, officials deem the agreement a win for American interests, asserting that even the reduced tariffs continue to send a strong message to China. In China, the deal is seen differently, as a strategic retreat by the US. Also, experts suggest that China now feels more confident going forward. Additionally, Donald Trump called the tariff pause agreement a total reset in US-China relations. However, China remained frustrated and continued to blame the United States for the economic damage caused by the trade war. President Xi Jinping used the moment to present China as a global leader and a defender of free trade. At a summit with Latin American and Caribbean leaders, he delivered a clear message. There are no winners in tariff or trade wars. Bullying and dominance only lead to isolation. Has the trade war between the United States and China truly come to an end? At present, the trade war is on hold, but its effects are already being felt worldwide. Whether this fragile peace leads to real progress or another round of economic conflict remains to be seen. Negotiations between the United States and China remain ongoing. The US wants China to take stronger action on fentanyl. China has agreed to lift certain non-tariff restrictions. Both sides say they don't want to decouple economically. They aim to resolve their differences and improve cooperation. But deep issues, like intellectual property rights and global trade rules, still divide them. The next few months will be critical in deciding whether this agreement becomes a turning point or just a pause in the battle. What do you think? Has the US-China trade war truly come to an end, or is this just a temporary pause? Let us know your thoughts in the comments.